Guys, welcome back to the channel. In this video, I'm going to give you the 5-year investment strategy that you need to know when it comes to putting money into pre-construction condos. This is more specifically for condos, not townhomes or detached properties, because those are different products. Those are more end user product. They don't make sense for investment, but I'm talking about condos, low rise, high rise, wood frame concrete. That's what this applies to. Okay. If you're an investor or first time buyer, stick around. I'm going to tell you how to approach pre-sales the right way, where you actually make money, and what actually happens through the entire process of 5 years, and where people go wrong and where they lose money. And I don't want you to do that. Okay, I've done this in the past, sold over 200 properties using the same strategy, and this is what we have seen over and over again. And we've helped a lot of people make sure that they do not panic in the areas where there is going to be blood in the water. So let me show you how you actually make money in pre-sale condos. So let me jump on the screen and I'll break it down for you. So when you're looking at a pre-sale, you're going to be looking at this timeline. So this is 2025. Let's talk 25 because we're almost at the end of 24. 25 is where you start. 23 is where you want to be. And that's when you want to make the big decision of either offloading the property or refinancing it. And that's where you're going to be making that decision. In between, there's conditions that you need to meet in order to make a decision of flipping the property, selling the property, making changes to your investment. Okay. Other than that, you only make 2 decisions, and that's when you buy and when you sell. And that's a 5-year timeline I want you to understand. Okay. So 2025, let's say you were to find a property and you would put 5% deposit right now. So I'm going to make deposit in green. So that's 5% deposit in 2025. So you go through your first phase. This is when the project is continuing to sell and you just made your first 5% deposit. Then you're going to make your second deposit, which is going to be another 5%. Let me get this 5% right. So that's your investment. So let's say your total investment now is 10% into the project. That's all you need for the first year or so. So this would be, let's say, January. Hopefully you can see this. This is January, your first deposit. And this would be your second deposit in 9 months, or it could be a 1 year, depending on when you're buying. That's the only investment you need to make in order to get started in any pre-construction investment. I'm talking more specifically for wood frame in this scenario. If you have concrete, you'll probably make a third deposit, which would be about 18 months from now. So let's talk high rise too. So you do 5%, and this would be 18 months. That's usually max the way it goes. So you'll be total 15% deposit for high rise. If we do 50%, and that's high rise. Okay, so that's your investment. This is when you're giving deposits and making money. Okay, or not making money, you're putting money into the project. So when you get to, that's the highlighter. I'm going to go back to this. This now is 2028. This is when your project is going to complete. In many cases, 3-year completion time, that's when the project completes. Okay, you make these deposits on the way. You make your first 10% in the first part, and then you make your 15, probably 18 months out, and then another year and a half till it completes. Okay, this is where a lot of people go wrong. They all prepare for this. Nobody prepares for this, 2030. Because what's happening in this area, this is very important to understand. So I'm just going to move this up right now for you, okay? In this area, you have 2 or 3 things happening right now, okay? So you bought a condo here for $500K, for example, okay? You paid $1,000 a square foot for it. Oh, there's one more zero. Okay, so you paid $1,000 a square foot for it. In 2028, that is still not $1,000 a square foot. That's probably going to be $1,050, $1,100 a square foot. And if you bought it right, if you bought it in the tier 1 pricing at a good price point, that's going to appreciate even during the process of you giving your deposits. Okay, I'm going to take this example, and this right now is selling for 11. Okay, let me just go back to this. Yep, so $1,100 a square foot, and I'm not even taking a big square feet. So let's just do $1,100 square feet. Okay, so I'm looking at this and saying, okay, you bought it for $1,000 a square foot. It's only gone up $100 a square foot. This is not where you want to be making any moves. None. So what's happening right here is where people think people lose money and the market's dead, there's blood in the water, is because completion is coming up. So here, whether people have thought about flipping the property or not, you're going to have blood in the water at this point. Okay? There's no reason why you should be selling at this point. Not before completion, and usually not within the first 6 to 9 months after completion. So 6 to 9 months before completion and 6 to 9 months after completion. Do not want to sell in these time frames. Unless the only condition I would say is you have a market that was in 2022. If you don't remember what the 2022 market was, there was no inventory, and everybody was going after assignments, and people were making that $100,000 flip. There was no inventory in the market, so everybody was taking all these assignments, and they were taking profits home. Okay? Your property has gone up, but what's going to happen is if you don't make any moves, this is where people go wrong, this is where people think, this is where we're at right now. For a lot of areas like Fraser Valley, even �𝐄𝐑, areas where there's inventory completing in 25 right now, this is where everybody is. There's 6 months before completion, 6 months after completion. This is where blood is in the market, okay? And this is where you will lose money if you flip it, or sell it, or you can't close on it. And that's where a lot of people think, oh, pre-sales are not to be made money on. No, dude. You bought it for $1,000 a square foot. It's now worth $1,100 a square foot. Whether you like it or not, prices are going to go up. Either the units are going to get smaller or the prices are going to go up. And that's happened over the last 2.5 years. I've seen this market do this, okay? So I'm going to tell you right now, whether you like it or not, prices do go up, okay? But the money is going to be made in the next 2 years. So this year, this is our strategy going into 2030, okay? This is exactly how we play this out. And we've done this from 2020, 2021. So now we're playing the same scenario out, but I'm giving you an example so you can see what the next few years are going to look like, okay? 28 is your completion time. You don't want to make any decisions here. Unless the market takes off, then you can make that decision. But when you get to 2030, this is what I want you to look at, okay? Okay, I'm going to give you green here. Whoop. So 23 comes now. So now you have a 2-year, so 1-year lease you signed as soon as the project closed. So you're either renting it out, you're in a 1-year lease with that tenant now. Leave it, let it carry it, wait, let it play out. Don't make any changes at this time point. If you're going to move into this property as your own home, live in it 2 years, live in that property, then you can make a decision, okay? But here's what most people don't understand, okay? And I've shown this in another video of mine. Whether the market shows you $1,100 a square foot or not in the finished product, the pre-sales that's selling right here, 28, 29, are already going to be $1,150 a square foot. Go look up any pre-sale project. I'll show you the ones we looked at in Surrey. They sold us at $900 a square foot. They're selling at $1,050 a square foot in the pre-sale market that's completing 2 years after our completion, right? But because there's blood in the market, everybody thinks people are losing money. But what's going to happen is over the next 1.5, 2 years, you're going to see this play out. Is now the blood is in the market is done. First 6 months, 6 months after, everyone's kind of, balanced out. People are now stabilized in that building. Then next 2 years, you're going to have more projects launch, okay? By the time you get to 2030, you're going to have pre-sale projects selling at that time with a 2-year or 3-year completion time. And they're going to be selling $1,250, $1,300 a square foot. I've seen this play out. Go look at Surrey Central right now. Go look at Langley right now. These are all happening. This is where you make a decision. Okay, now you bought it for $1,000 a square foot. Okay, you bought it $1,000 a square foot, and now you're in 2030. Your unit is only 2 years old, but the pre-sale market is selling these units for $1,250, $1,300 a square foot. That's when you make a decision what you want to do. If you want to sell, you got to figure out where your selling cost is. And if you buy, if you're gonna refinance it, that's where you get the appraisals. This is where appraisals come in, okay? Because now you have product that's selling, and sometimes this product is completing. So remember, you completed 2030. There's gonna be product completing in 2030. So you can look at comps for 2030 product and show it to the bank and say it's only 2 years old. It's a lot higher than what we paid. We've done this in the past multiple times, right? So this is the strategy you want to go in with. The only decision you should be making is at the beginning and 5 years later. In between, the only time you make this decision is when the market takes off or you have financial hardship. And I don't want anybody to go through this phase because you need to be well prepared prior to any pre-sale project. So you want to be making sure that you have the money to close on the property and that you have a plan to rent it out for 2 years.